Hi everyone, welcome to this live coverage. We are going to try to cover the Fed latest meeting live starting right now. I'm waiting for Yohay Elam from Forex Crunch. He will be joining me in a few, right? I will give you a link to a chat room. So if you want to share with us some questions, comments, or whatever, you're welcome to do it, okay? Give me a second and I will share it with you if I can. Okay, now you have it right below the event, right? You can click on the link below the event and join the chat room, okay? Anyway, here we are. We have had a really bad uh, GDP reading in the United States today. And I do believe that the biggest surprise for me is the fact that the euro finally broke higher and took the 1120 price zone, a probable target we were discussing earlier today, even before the GDP release, because it stands as to be the 61.8% retracement of the latest bearish run, right? Furthermore, we have the 100 simple moving average in the daily chart in the same place. So actually, I was hoping or expecting the pair to reach that level as the most after the GDP negative reading, but I was not expecting the pair to even advance further. If we take a look at bigger time frames, the fact is that the greenback has been uh, extremely overbought for weeks and months, right? Particularly against the euro and the Japanese yen. So uh, this is, of course, the new corrective movement. Whether if this movement will extend or not much will depend on what today the Fed has to say, right? The Fed is expected to do little today. In fact, we are expecting uh, the Federal Reserve to maintain its economic policy and change. Uh, sorry. As I was saying, we are expecting the Fed to maintain its economic policy and change and make no kind of announcement. The market will be focusing in any clue the Fed may give on the upcoming rate hike. The fact is that we start the year with a high note in there, uh, pricing in a probable rate hike for June. And as the month went by and the data resulted tepid in the US, hopes diminished, and then we are at the point that we will start speculating about September as possible date. And now at this point we are talking about the last quarter of 2015, meaning all the hopes market had for rate hike, the kind of news that can bring the dollar strongly higher across the board is now being reversed. So what we have seen today suggests there's a lot of more room for the dollar to go to the downside. There are a couple of things I want to notice about that, and one is that we have payrolls this not tomorrow, not this week, but next Friday, on the May 8th, I believe. We have UK elections the previous Thursday, May 7th. So we have a lot of things going on in the market these days, but for most payrolls will be a key right next week, because if we have today a dovish Fed as we are all expecting, and we have weak employment figures in the upcoming payroll, I do believe that will mean a really mm, bad bearish run for the greenback. One thing that outstands today of the plosy GDP readings is the fact that export dropped over 7.2% or something like that. And that's thanks to a stronger dollar, right? The stronger dollar means manufactured products in the US or whatever the country can export has become more expensive to the rest of the world, right? So in fact, a weaker dollar at this point is what the economy needs. And in the meantime, in the middle of all this, keep in mind that Europe is starting with quantitative easing, right? It has been just 1 month. We are in the second month of the 60 billion euros buying of bonds. So Europe also wants a weaker euro, right? They needed to pick up. The economy is far worse than the American one. So it's a battle of the last week we will have in there. Okay, keep that in mind. Anyway, I believe that the pound may retreat some if the elections result in a hung parliament next week. But for the most, if I have to go against the greenback, I will be a happy buyer of the pound, right? Not a happy buyer of the euro. Uh, just so you know. Okay, let me check if we have any news. Uh, one warning I can share with you right now is that uh, we have a little delay, right? From the moment I said something until the moment you get it, it will be 30 seconds, maybe 1 minute. So we will probably be getting the news a bit with delay. But yeah, here I am and waiting for Yohay that is having some connective troubles. But anyway, here we are, right? I will check whether we have any questions or comments. Of what the market is expecting. Keep in mind that the Fed has changed the wording last time, right? We have a strong change in the wording. We removed the word patient and replacing for something pretty much similar. So uh, I don't know. I do believe that the key will be in this wording of the statement. And remember, we can have a contrarian spike as this initial market reaction, and later on see the pairs moving in a different direction. The one things I like at the moment is I'm watching the 180.50 level in the dollar Japanese yen, because if you take a look at bigger time frames, it has a huge floor in that area. We have several daily highs, lows in that level, right in this area. And despite pair has been trying to break below this 100 simple moving average in the daily, the fact is that the moving average is flat and we break, we recover. The price is still too close to confirm a breakout lower. But I do believe that if somehow we break through that 1850 price zone, we have scope to grab some pips and move lower. 1717 is my next probable bearish target in there, right? And indeed, a dovish Fed will do the work. And for the euro dollar, honestly, as I was saying, this was my key level. So right now, the next logical target comes at 12 man. If we take a look at bigger time frames, you may see that this around 1260 or so, we have also very relevant level, resistance level. So another 100 pips is the most the pair can add today. Okay. And if we come above that level, then I see scope to test 115 in time. Hi, Yohay, how are you?
Hi, Valeria. I'm good, thanks. I'm fighting the computer, but all set for the Fed decision. Yeah.
Okay, super great. Thank you. Okay, I don't see your charts, but if you share your charts, I
Yeah,
will.
I'll do that as soon as I can.
Yeah, I will be glad to share. And I was saying that the market it's not putting too much hopes on big news today in the Fed, right? We are not expecting a big surprise. We're expecting the American Central Bank to keep its policy on hold, right? And if something to be a bit dovish, but that's my personal take.
Yeah, we had the terrible GDP report earlier today, and of course, the Fed has it in front of its eyes. Probably already yesterday, it had it, and we'll see if the big question for me is: does the Fed see through Q1 and decide that okay, that's just a
Okay, I'm losing.
eventually positive reaction in the dollar, does worry about the economy, and then we'll have, of course, maybe another leg down for the US dollar.
Okay, someone's asking in the room is anybody has a link for the FOMC. The fact is that there is no press conference today, so there's only going to be a statement, a press release that will be published in about 4 or 5 minutes, right? So there's no link for
Right.
watching it. Okay, where do you see the euro heading from here, Yohay?
Well, it broke the all-important 110.50 level, which was the top end of the and so basically it has no real resistance. We already saw it run another 120 pips after breaking this line, and I think resistance, I see it at 113.73, which is an old line. 112 is sort of immediate resistance, and 115 is another very round line. But basically it has more to run. I don't know why I can't share my chart, but
Okay. I can't see your charts yet, just so you know. I also believe that the market has done quite a lot already today. So, meaning the euro has rose 200 pips after GDP reading. So, it's pretty likely that we are not going to see too much more action. It's possible, of course, that the currency continue advancing, but it's hard to think on another 100 pips after the news, right? Unless we have a really, really dovish Fed saying that they are not considering any more rate hike or something like that. But seems pretty unlikely. Just keep in mind that
dollar is a bit too down. I mean, it's a lot. The euro, the pound, and the Aussie. And that decision, we could see these pairs of the gains. See the same kind of in.
okay, I hear you really, Kat. I can hear you fine. Can you hear me, Yohay? I guess you're not having the day with the computer. Okay, Yohay is gone. I'm again alone. Sorry, guys. We are working through with this technical issues, but I guess we will get back. He's having a problem since this YouTube hangout is freezing his computer. I apologize for that, and we don't have technical backup today, so I'm alone with all managing the production and all. He can't get too much help from me in that side. Anyway, 1 minute until the release. I will be sharing with you the main headlines and the probable market reactions and what we can take out of those reactions, right? Don't worry, guys. I will try to be here. Okay. Market is getting nervous. We have to ignore these spikes. But the dollar seems to be finding some demand. Short-term one. Really limited for now. Does not seem like too much. Okay, let's see what the Fed says. Winter slowdown partly reflects transitory factors, meaning they are blaming again what's going on in the US, the slowdown for the first quarter. They are blaming it on winter as they did for the last 2 years. The dollar Japanese yen is posting a strong comeback, returning to 19 level, almost 50 pips higher after the news. So, but not much reaction across the board. The euro is pressuring that 1120 price zone. Okay, they still see some moderate growth, and they are happy with how jobs have gained even after the slowdown in the Q1. So they're saying that they're pretty. The statement, as much as I can see for now, it's been a bit hawkish, a bit more optimism than what the GDP reading has suggests. So we are seeing some dollar strength. Watch the 110.15 level, the previous highs in the euro, because maybe we can correct down to that level, but if buyers had rally there, chances will remain to the upside. If we load that level, on the other hand, then the risk will be a bit more complicated for the euro. But so far, not much to take out of the news. Yes, there are not much chances the Fed will rise rates now in June. Okay, but that's something we already knew, so the market is not reacting to such news. I'm reading my yes. Thank you, Annie. That's the link to this full statement. You have it in the chat room. It was really a short statement compared to previous ones. I'm taking a look at it to take something out of it. Okay, okay. Another little impulse has been it's being erased across the board.
Can you hear me, Valeria? Everybody?
Now I hear you. Sorry. Welcome back.
No, I should apologize. I don't know, some kind of technical problems here.
Don't
Each time I try to share my screen, things got stuck.
Okay, don't worry. I can share my charts. Yeah. Anyway, the statement is out, and as usual, they are blaming everything on the weather, on the winter, right?
Yeah.
And still a bit optimistic, right? It's a bit more hawkish than I would have expected. They've seen that the jobs are growing despite the slowdown in the first quarter. They still see, and they were unanimous decision.
Yeah, the Fed in 2000, the voting composition of the Fed in 2015 is much more aligned with Janet Yellen. That's very different from 2014, in which we had we had 3 dissenters. So everybody's more got the memo from the party or something.
Yeah. Anyway, the dollar Japanese yen is pretty jumpy. We have run up to 1910 or so, a favorable level, a level that here has been struggling to overcome, and it's now retracing. And the dollar is finding at least some place to correct a bit, but it seems not really sustainable. In fact, the year is about to turn green in the current candle.
Yeah. Biggest headlines I noticed was that the Fed sees moderate growth in job gains after Q1. That means that in general it sees through the weakness in the first quarter, and expects things to improve later on. So this is relatively hawkish, but not fully unexpected.
Yeah.
So the initial reaction is positive for the US dollar, but
price action is not reflecting too much hawkiness.
limited. I mean, euro dollar fell below 111, but it's now back to 111.30. It was at the highs of 111.86 earlier in the day. So it's initial reaction, a stronger dollar, but with a big bounce back.
Yeah, not really sustainable. So leaving room for further dollar declines. I'm watching euro that it's far above the 110.50 price zone, which is now aligned in the sun for me, right? As long as above former highs, we have still room to go to the upside. And if somehow we close the day in the current 1130, 40 area or above, we have room to test 12 or 1260 as we were discussing earlier.
Yeah.
Fed removing.
Basically, dollar yen is back to where it's been. No?
Yeah, I'm seeing a tweet from Ransquack saying that the Fed is removing calendar references to the rate lift off. I didn't check the full statement, but it's a short one.
So the Fed is generally still optimistic.
Yes.
As you mentioned before, they blame the weather. Winter slowdown partly reflects transitory factors. So they see it as temporary, transitory.
Yeah.
I'm looking for the... Yeah, they see job gains as moderated. Last time they saw it as strong.
Yeah.
But labor slack little changed. Of course, no comments on the US dollar, but it's very rare that...
They made a comment, yes.
Yeah, we see it sometimes in the minutes, recently more and more, but not in the statement.
Focus on employment, price stability. The committee continues to expect that with appropriate policy accommodation, economic activity will expand at moderate pace. Labor market, all the same, right?
Yeah, I'm looking. Well, they removed forward guidance totally. Last time they removed patience, but explained they were unlikely to change the rates in April. And now I'm not finding anything.
On dates.
Yeah. Yeah, the key line I think is the committee anticipates that it will be appropriate. Just a second, disappeared.
Yeah, someone has just released. Amazing how fast the market is. A statement comparing March statement with current one, and the things that they change, right?
Yeah. The committee anticipates that it will be appropriate to raise the target range for the federal funds rate when it has seen further improvements in the labor market and is reasonably confident that inflation will move back to its 2% objective over the medium term. That's very, very general, no forward guidance whatsoever. I think we're seeing another wave of dollar buying now. Euro dollar is down 1.13. It's still, of course, much, much higher than it has been earlier.
Yeah.
In the day before the GDP.
Someone's asking how about euro and pound, what they may do. Can you hear me, Yohay? Or I lost you.
Yes, can you hear you? Mm-hmm.
What do you think about pound?
Well, we're 8 days from the UK general elections. I think we began seeing the polls having some impact. There is a good chance that we'll have a hung parliament. It means bad result for the pound, for the UK economy. And I think that's not priced into the pound. So I see potential for a fall in cable or a rise in euro pound after all is said and done. I think the pound had a strong run, and it's a bit too much.
Yeah, technically, I do believe we have a really short-term support in the 54 level. So we take it, we can see the corrective movement extending towards 53.40, 50. And yeah, the last election ended with a hung parliament, and the pair lost 500 pips. So beware of that next week. But for now, the bullish potential seems pretty much intact. If we see some bearish move, I could be a happy buyer in between 53.20 and 53.50 with a tight stop below 53 at the moment, because I do believe that there's not much support in the greenback in the recent statement. If we turn and close this hourly candle into the green, then I do believe that we can retest the highs. But yeah, I do believe that we must concern about elections probably next Tuesday. The market will start taking profits out of the table, but not something
Yeah.
today or tomorrow, maybe, right?
Yeah, we've seen very, very small ticks earlier this week towards the Conservative Party, the Tories, the current government, and I think the market likes it, and this helped the pound just a bit. But the main reason for the rise of cable was just the weakness of the US dollar across the board. And it's important to remember that we had a poor GDP report from the UK yesterday.
Yes,
Not as bad as the one in the US, but it doesn't look good also there. And the initial reaction was a fall of 50 pips in the pound, but since then it ran 250 pips higher, and I think it's unjustified.
yeah. Someone's asking about the euro pound, but to be honest, it's maybe not the favorite pair to trade. I've seen we had a spike earlier, but at this point, I do believe that we are going to see a small retracement because of euro weakness, right? But not much more. The pair should return towards the 7160 level area, 7160, 70, right? There we're going, but
Yeah, in the bigger picture, the UK economy is doing better than the Eurozone. That's why we had a very big fall in this cross from much higher levels to the current ones. But since then, it's a bit stuck, and I think there is even a potential for a small rise there if the elections are really bad. The bigger picture remains, I think, for the cross remains bearish, but it's a bit, it's not such a good pair, in my opinion, as well at the moment. It's a bit
yeah,
messy.
yeah, but still, I believe that the dominant trend is bearish. The euro is posting fresh lows post news, breaking below 11. Remember, we talked about the former highs in the 1050 price zone. That's the line in the sand. We can correct lower down to that level, but if the level holds, then bulls will remain in control. But if it breaks below it, then the corrective movement may extend during Asian hours. The cable. Someone's asking if the cable will sell off. We are not saying the cable will sell off, but there's a good chance that if the elections end in the hung parliament next week, we may see a big retracement in all pound crosses. And even before the elections, we may see a pullback in the price of pound dollar because of market taking out profits, right? Not a sell-off, but maybe a retracement in the Tuesday or so. Pound should give up some ground.
Yeah, there's quick analysis from John Hilsenrath, is the senior Fed watcher at the Wall Street Journal, and he has some effect of his own on the markets. He sees the Fed keeping the hikes on the table, that can still happen this year, and he blames that the Fed blames transitory effects. Well, that's
Okay.
what we've seen as well, but it
Yeah.
gets sort of a stronger impact once it's also heard from Mr. Hilsenrath of the WSJ.
Someone's asking what's next for the euro, and to be honest, in my view, market will be waiting if the pair falls to buy it, right? And we are bullish as long as above 110.50. Maybe some downward corrective movement. That's the most I can see right now. 111. Yes. The big surprise for me is the dollar Japanese yen reaction.
Yeah, it was a bit wild, no?
Yeah, a bit wild and directionless because the pair has been trading pretty flat, right?
Yeah, it was one of the more stable pairs in a volatile environment.
Yes, we have a lot of volatility this day, and the pair is stuck in a 40 pips range for most of this week. So actually, not much going on in there. wild short moves in between Fibonacci levels. Not much more. Australian dollar in its break below 80 to gain bearish potential. So far, seems corrective, the decline. We have the Bank of Japan later on today. Sorry, I just remembered that. So
Yeah,
maybe that's why.
there is a chance that they will add stimulus. If not now, maybe next time, because they're just missing their targets. I mean, the governor of the Bank of Japan, Kuroda, is already enough his 2 years. They had a sort of an initial target of 2% inflation in 2 years, and it's just exactly 1 year after the government decided to raise the sales tax. That, of course, lifted inflation, but now this effect is over and we're going to get new inflation data soon. Maybe the Bank of Japan already has it. And we know that if we're removing this effect of the sales tax, core inflation is very low. And so we might get more stimulus from the Bank of Japan, but I don't think there's a small chance, but if it will happen, it'll be very, very yen negative.
Well, it actually needed, okay, because it's pretty strong dollar, the Japanese yen lately, despite ranging, it's favoring yen strength from what I can see. So we have a dovish Bank of Japan. We may go back to 120 in there, but still, I don't see the level going down easily. 120 will probably face a lot of selling interest. Okay, the euro is still pulling back. Yes, it's driving
Yeah.
the euro pound lower also, but slow motion. Canadian dollar is regaining the 120 level. Oil post a fresh year high after the news, so the market is digesting and into digest news.
Yeah, I think that as time passes by, I mean, the most hawkish, if you want to really use hawkish eyes, you can see that the Fed can still even raise the rates in June, because it didn't explicitly rule that out like it did last time with the April rate hike. I don't think there's a good chance of that happening. Data needs to improve very, very fast. But in general, I mean, we had such a terrible GDP report today, and we have a sort of steady Fed. So it's a chance for, as you said before, taking profits on a few currency pairs that moved high very fast. And yeah, for me, the key line in euro dollar is 110.50.
Yeah, the same. Someone's asking about New Zealand dollar, considering we having the Reserve Bank of New Zealand also announcing their economic policy in a in a couple of hours, right?
Right. I think that's one of the reasons the New Zealand dollar didn't rise very fast against the US dollar and the terrible GDP, different from the Australian dollar, for example, or of course the euro and the pound. What the RBNZ usually does is talk down the currency, says the Kiwi dollar is too strong, it wants it lower, it's ready to intervene. So I think the Kiwi bulls are a bit cautious. We already heard some kind of dovish hint from not from the governor last week, but from one of his deputies,
Yes.
McDermott, who sort of hinted that maybe the RBNZ could cut rates later this year. So I think if we don't hear anything special from the RBNZ later today, we could see NZD USD rallying, but they might try to talk down the currency as they do many times.
Yeah, the usual. But rates anyway are expected to remain unchanged. So I agree.
Yeah.
wait
3.5.
till the dust settles with the announcement. I would wait and then try to see if I can buy the pair
Yeah,
if I'm still awake
I agree.
at that time of day.
What? Yeah, it's. What do you think about recent volatility, Valeria?
I love it. I'm really happy. I was. It was so annoying the lack of volatility that we have for most of the second half of 2014. I'm thrilled. I'm thrilled the market's moving all day long. I'm thrilled that we have action that I can place an order and see it get filled in within the year I place the order because
Yeah,
so I love volatility.
yeah, me too.
I know it's the
I,
market more risky maybe or unpredictable for some when it's volatile, but anyway, I will always prefer it over a flat market. Uh, one of my favorite pairs when I started trading was dollar Japanese yen, and lately with this range stuck in there, I hate to see it. I hate to see a pair stuck. So I usually close the chart and punish it, send it to the corner,
yeah,
but
minimize it or even shut it down completely.
yeah,
But yeah, I think with dollar yen, we've seen many times sort of this pattern of long periods of very tight range trading and then an explosion,
yeah, that's the dollar to mention.
extreme trend.
Yeah, no
Yeah.
pull, no
So
retracement in the middle, no correction. When I
yeah,
that's the thing I love the most about dollar Japanese yen, maybe the fact that when it actually starts moving, it moves and it goes straight like a donkey after a carrot, right? There it
yeah,
goes. There it goes until it gets sleepy again, right?
yeah, yeah. If it's like, I mean, I heard sometimes people comparing forex trading to air traffic controllers in airports. They have many long hours of boredom, and then suddenly a few planes try to land at the same time, and they have to rush to the situation very quickly and take fast decisions. So that's maybe a good idea of how forex looks, and but specifically dollar yen.
Yeah. Someone's asking for level to watch out in the euro and the pound. For the euro, we have said the 1050 is the key level to downside. We can see that the pair correcting down to that level, but we expect some buyers to defend it, right? If we break that level, then there's a risk that the pair will retest 110, right? It will
Hmm.
turn bearish, but actually it's not bearish at this point. I have this Fibonacci area around 1120. We have this high, so my take is that after the dust settles in the next couple of hours, if we regain 1130 or so, the pair will probably retest the highs and even right higher. Right, that's what I'm watching there. And in the pound, the 154 level is the first one we have right tested right now, but I would say 5380 will be a level to watch because it will probably extend its decline, maybe for 40 or 50 pips. I'm not so good thinking. I'm not thinking that it will be an easy buy in dips pound right now. It will go lower, right? There's a chance will continue retreating, but I would say that 153 is 50 is the most pair that can retreat in the short term, and there we may see some buying interest halting the decline. And to the upside, honestly, at this point, I do believe that the level to break is 55 to confirm a recovery, right, and further gains, another rally, because right now stops sellers are placing their stops above 55. And for the dollar Japanese yen, as long as in between 1850, the base of the latest range, the low of the month, and the base of the channel, and between that level and 120, there's nothing to do but play the range. Not going, not seeing much direction. Still not happy. Keep playing the range in there because it's moving wildly in between. Uh, what do we expect about Aussie? The fact is that the Aussie has been much more strong than was thinking about. I was not expecting the pair to reach or approach to 81 as it did right now.
Yeah, it was quite strong. No?
Too strong. We have the Reserve Bank of Australia next week, right? So if the Reserve Bank, there has been a lot of comments about having been leaks before the meetings in the last three meetings. So I hope this upcoming meeting will be a bit more serious. But I do believe that they will stay on hold. They won't surprise the market with a rate cut. So that will give further support to Aussie. What do you think, Yohay?
I think Reserve Bank of Australia doesn't like the strong Aussie and especially the recent rise.
You,
Hmm?
you have a point there, indeed. They don't
Yeah,
like.
and they did leave some hints that they were sort of left the door open for rate cuts. So I think there is a good chance that they will cut the rates, at least in order to hit the Australian dollar. On the other hand, we did have an excellent jobs report from Australia,
Yeah,
so not everything is really terrible there. But it could help shift the market's focus, try to lower the value of the Australian dollar by cutting the rates and by pointing the finger to China, to Chinese slowdown,
yeah,
so that the markets will not focus on Australian strength, but rather on Chinese weakness and continue weakening, resume weakening the Australian dollar. So I see. I see the RBA hitting the Australian dollar next week, especially after this spectacular break above 80 cents.
yeah. I don't know. The market has been the Aussie has been also being supported by Chinese stimulus, right? The Chinese are making a lot of stuff right now these days. So there's I'm not sure what Stevens will do, but indeed he has the last word because if he does not cut rates next week, the ELC will probably continue running strongly up, right? Yeah, someone's asking, says, a bit surprised UK coming election hasn't weakened pound even a bit. Yeah, we have been talking about that with Yohay a few minutes ago. There's a good chance that ahead of elections, probably Tuesday next week or so, we are going to see pound retracing, sorry, uh, at least on profit taking, ahead of elections. And if the elections then hang parliament, there's a good chance the pair will extend that decline. I was commenting earlier today that the last time we had an election in the UK that ended up with a hung parliament, and that's the condition, the hung parliament, the pair lost almost 500 pips or so, the pound dollar, I mean. Yeah, it's a bit of surprise. But I guess if the polls continue to show in the coming days that the both the Labour and the Conservative Party are even in polls, that will weigh on pound, but not now. We are holding there. The euro is regaining 111, so the pullback did not make it to the 110.50. So actually, there's not much saying that the dollar will strengthen, right? Only the dollar Japanese yen.
Yeah, which fell quite quickly but rose at the same speed. Yeah, 111 was the level that it reached at the end of January. From there, it made a very nice recovery before falling again in early March. But I don't see it as an important line, as we mentioned before. 110.50 is the key level.
Yeah,
The move sent dollar CAD back up above 120. Earlier, the pair fell to 119.43, mostly on the poor US GDP, but also on a rise that was lower than expected in oil inventories. But I think this Fed statement puts things a bit more into proportion. the Canadian dollar, like the Australian dollar, also they both had a great run and a bit exaggerated, maybe.
Yeah, both commodity currencies are on fire today.
Yeah. Seems like euro dollar is stabilizing at 111. No?
Yeah.
I found here something in the Fed statement. Growth in household spending declined. Households' real incomes rose strongly, partly reflecting earlier declines in energy prices, and consumer sentiment remains high.
Okay. Yeah. Well, housing data has been among the weakest in the past quarter.
Yeah, especially new home sales.
Yeah. Okay, I guess we are not going to see much more short-term action right now. The market will probably settle, and we have Japan closed on holiday yesterday, so we are going to see a lot of interesting moves later on. Not only because the New Zealand central bank made its policy announcement, because Japan will come back after a long holiday, right? So keep an eye on how stocks close in the US, because that may lead on how stocks will do in Asia. But do you want to wrap up this, Yohai, please?
Yeah, well, the Fed didn't make a big surprise, but basically, on the background of weak GDP that was released today, almost stagnating or even recessionary figures from the US and scary ones, the Fed seems on track to raise rates this year. The Fed sees the weakness in Q1 as transitory due to the winter. It sees inflation expectations as stable. All in all, of course, they acknowledge the weakness, but they blame it on the weather in general, and they do see things improving. Especially, I think we can sort of see that they expect consumers to spend more because real incomes have risen. So all in all, it's within expectations, but sort of leaning to the leaning to the hawkish side,
Yeah.
and especially coming on the background of the poor GDP numbers. It gave an opportunity for markets to take profits on the big sell-off of the dollar, especially against the euro and the pound. And I'll just add one thing. I think, of course, this isn't the end of the reaction to the Fed move. I think we'll, as you mentioned, see things with the Open in Tokyo and in Europe. And I think we'll have another round of dollar strength on this Fed statement. I think we haven't seen everything yet.
Okay.
That's my bet.
Yeah, thank you. I'm thinking that there's a lot of dollar bulls asking about it in the chat. Honestly, guys, keep in mind that the dollar has run wildly for months, and it was time for the corrective movement. In general, I still do believe also that the dollar has the potential to run farther, particularly against the euro, the yen, because despite this dovish day we have today, the US economy is doing much better than the rest, and we have a huge imbalance in between central bank policies, considering the Europe is starting quantitative easing and the Fed is discussing a rate hike, right? But that does not mean that the pair will go straight in one way after already easing over 3,000 pips, yeah, or more in the past month. So uh, I why I'm still a dollar bull, I do believe that this is not the moment maybe to buy the greenback. Eh, I would think about waiting for higher levels in the euro or the pound, or even dollar Japanese yen lower levels, right? 1717 is my line in the sand in there, right? Before considering to buy the greenback, or either a stronger recovery maybe next week with a really strong payroll that made us forget how sad GDP readings were and previous payroll was, right? That's my take on it. But I don't believe it's now the moment to be long in the dollar. Because a lot of longs are being scared or wiped out by the market. Okay. Anyway, I do believe that's it for today. I want to thank Annie, Annie Salama from FX Street, who was helping me from the behind. Of course, thank Yohay to always share this time with us. It's great, Yohay, to share the market with you, particularly when we have the Fed. You always nail it. So thank you, and
Thanks, Valeria.
no, you're welcome. And thanks to everyone that joined us. And we'll see you soon, okay?
Soon. Safe trading.
Bye bye.
Bye-bye.